We're going to bring on Gwen Griffith in studio, Fairway Independent Mortgage Corporation. Gwen, welcome to the company.
Thank you.
My pleasure. Give our audience a little background on you and what you're doing, and then let's walk into the topics we planned on talking about today.
Absolutely. Well, I have been in the lending world for a little over 16 years now. I've done every kind of loan you can imagine as far as commercial, USDA, FHA, construction, you name it, I've done it. And back in 2013, I was kind of losing my zippity, so I needed a little doodah to add back to it. So I heard about the reverse for purchase that was coming about to the state of Texas, and I was like, wow, I got to get in on this. This is going to be huge. So I learned it, and I have now become a reverse mortgage specialist. I am actually a reverse mortgage planner. I am certified in the reverse for purchase program, which is what got me excited about the reverse world. So I have spent the last 3.5 years going around and talking with realtors, SRES realtors. I actually teach SRES classes. I've gone around talking with financial planners because I feel that it's an absolute disservice that they are giving to their people by not offering the reverse mortgages or even speaking about them, because most of our people, our 62 and older group, they have so much wealth sitting in their homes that's being untapped. There's $6.3 trillion worth of unused equity that is just sitting there doing nothing. And in the state of Texas, that is just mind-blowing to me, because we have the highest property values we've ever had.
Right.
So we need to be tapping into that and showing our seniors how to live better lives, how not to have to depend on just their retirement, how they could, diversify. Instead of having just the 2 buckets, they can have 3. So that's why I got into that, and that's why I joined Fairway Mortgage, because they're so extremely committed to the reverse world that it just kind of helps my platform go higher and stronger.
Give us a breakdown on what actually are the mechanics of this.
Sure. Well, let's say that you have a 62 or greater, borrower that is needing some money, and they're living on a fixed income, yet they've had this house. Let's say they've lived in the same house for 30 years, and they've got $200,000-$400,000 worth of equity, and the only way that they're going to be able to tap into that is one of 2 ways. They're going to have to do what we call a Texas A6 cash out loan, which then they're going to have to turn around and have a payment on, and also, they're going to have to qualify for it, or they can tap into it by using the reverse mortgage refinance loan. And what that does is it allows the senior to tap into a portion of that money, of their equity in their home.
How big a portion?
Well, it's based on age, but let's just say if you're 62, they're going to let you tap into about 42-43%. So you can see right there, you're still going to have equity in your home, but you get this money tax-free. There's no house payment due on the loan for the lifetime of the loan. There are payments. You're going to have your taxes and insurance paid, of course. And of course an HOA, should you have an HOA on your property. But there's no house payments. So what it does is it allows that senior to tap into that wealth that they've built in their home, tax-free, and be able to subsidize their monthly income. They can take a really nice portion of it at the closing table. I can set it up in a line of credit that's going to grow, between 4.5-5.5%.
A year?
Yes.
Oh, okay.
Yeah, it's an annualized, growth. And the best thing is that the senior always owns their home. They always retain title, and they can do anything they want with that money, and it's absolutely tax-free. And here's the thing that I am just amazed by, that is not being given out, this information given out by financial planners and, CPAs and stuff, is that this money is tax-free. This money is their money that they built. This is wealth. Financial planners say that 10% of the population needs these loans. No, 90%.
Let me jump in there for 1 second.
Sure.
Is this only work for individuals, or can companies do this, or can nonprofits do this?
These are primary residence loans. These are for individuals.
Okay.
Correct.
Let's
This is
clear that up.
yes, this is a residential loan. And it does have to be on their primary residence. But, if they want to take money out and diversify and buy rental property, or let's say they want to buy a second home in Florida, they can do whatever they want with this money. It's absolutely 100% tax-free. And it's their money.
When
Yes.
having been in that world for a large part of my life, and I saw a lot of reverse mortgages and obviously abuse of them in the past also, one of the things that always came into play when we talked to people about reverse mortgages is the terrified idea of no longer having, quote unquote, free title to their home. Can you kind of talk about what that means psychologically for the homeowner?
Sure. Well, these loans used to be the loan of last resort, and it really should be the first loan you go to when you're a 62 or older, individual. Because the reason they had such a bad negative connotation was that you heard horrible stories how they used to put, grandma and grandpa out on the curb. Well, these loans now are so highly regulated and they're so safe for the seniors that you would almost have to try to lose your home. You can't, if you don't pay your taxes and insurance, that is the absolute only way that you're going to lose your home. But the thing is, and there's major falsehoods out there that just go around because everybody knows somebody that did it around the corner, around the block or whatever, and everybody has their horror stories. But the truth is, you always maintain title to your home.
Gwen, let's stop right there. But before we close out, real quick, contact information for you. And we'll come back and talk about it on the other side of the break, but contact info for you.
Sure. My direct line is 972-839-8895. You can always reach me by email, which is gwen.griffin@fairwaymc.com.
Great. We'll be right back on the other side of this break with Gwen Griffin, segment brought to you by thevitaminpatch.com. Welcome back to CEO Money. I'm Michael Yorba. All right, we've got Gwen Griffin in the studio with us right now, Fairway Independent Mortgage Corporation. Gwen, welcome back to the show.
Thank you.
You're welcome. All right, Ed, you had some questions during the break that I wanted you to bring up, but before we do that, let's take care of some housekeeping. You've got something you need to do, Gwen, right?
Yes, I just want to make sure that everybody understands that I am a licensed loan officer here in the state of Texas. My license number, NMLS number, is 162304.
Ed. All right, go ahead, Ed. Ask her the hard questions that you were coming up with and you had great questions or answers, Gwen. So, but go ahead and start it off, Ed. You're welcome.
I don't think the questions are necessarily hard. I think it's a revolution of understanding the quote unquote new reverse mortgage versus the ones we may have seen back in 1627 when I was still practicing. I think that it's important to emphasize the safety part of it. So, Gwen, talk to us about how you safeguard the seniors when they actually do go enter this particular type of contract, and some of the things that make it safer and also validate their ability to enter it.
Absolutely. Well, like you said, and I'm glad that you pointed out that it is the new reverse mortgage. And because they did have such a negative connotation years ago, there's been so many safety nets that have been put in to protect the seniors. And one of them is they do have to go through a third-party counseling session before that they can actually enter into contract. And what that third-party counseling session is going to involve is it basically is going to go over exactly what I go over with the borrower and the family, and tell them the closing costs, how much they're going to get, what kind of payments that they can receive, talk about their line of credit, but also, which is what I think is awesome for the senior, is they're going to ask them questions to see if there's anybody forcing them into doing this loan. They're going to ask little questions just to make sure that the senior is of sound mind, and is cognizant of what's going on and has all their facilities about them so that they can, enter into this contract.
Well, obviously that cuts me out because we know I'm not of sound mind, but it's interesting, because I having been in that world before, I remember some of the horror stories I heard, and it's refreshing to know that there's been regulations and new legislation put in place to protect seniors from some of the things we see happening to them. So I'm glad that you were here to clear that up for us.
Thank you.
Let me jump in there. What about the mechanics and the risks?
The mechanics of it are they're really simple. It's based basically off age of how much you're going to be able to borrow. It's based off how much equity that you have in your home, and like I said, you do have to go through the third-party counseling just to make sure that everything is copacetic on that end. Mm-hmm. And then we go into application. The application is very much like a traditional forward mortgage. It's a little bit more paperwork because in that paperwork, they are going to remind the senior over and over that they have to pay their taxes and insurance because, as I've said, that's really the only way that you can lose your home in a reverse mortgage is if you don't pay your taxes and insurance. However, even if you owned your home free and clear, you're going to lose your home if you don't pay your taxes and insurance or a traditional mortgage, So we go through that. They are FHA insured, so we have an FHA appraisal. The loan process is about 21 to 30 days. It's very typical as a traditional mortgage. They're considered, since they have a cash out on them, we have a 3-day right to rescind once they do close the loan. After the 3rd day, if they don't rescind the loan, they get their money wired directly into their bank account. But one of the best things about the reverse mortgage is that now they can purchase on a reverse mortgage. And the way that works is, let's say, and I'm going to just use 50% because it's easy to comprehend on a whole numbers. So let's say you have a senior that wants to move next to the grandkids. They need to move next to a facility, a medical facility. Or let's say they just want a right size because they've been in their home for 30 years. The house is way too big for them. And they may want to even move into something more, updated, more upgraded. What they can do is they can take the equity from the sale of their property. So let's just say that they get $200,000. And they can't really find anything in that $200,000 mark where they're going to have to put the $200,000 down. Well, what we can do for them is we can help them purchase a $300,000 home with, let's say, $150,000 down. They have no house payments for the lifetime of that loan as long as they're living in that home for at least 6 months out of every year as their primary. And now they have a beautiful new home with no house payments.
What happens to the original house? And are there any restrictions on what they can do with it? Because you have the reverse mortgage in place where it's paying them, and they're using a portion of the reverse mortgage to come back and actually acquire new real estate.
Okay, now we're talking about taking money out of the home that they're going to keep. I was talking about selling their primary and being able to now purchase a new home under the reverse mortgage for purchase program, which is what we just got here in the state of Texas as of November 2013. And that's what I was saying made me want to get into the reverse world because those are huge for seniors. There are so many seniors today, and especially in the state of Texas, our average home is $275,000 now. Well, everybody and their mother is buying a $275,000, home, so they're harder for those seniors to find. And if you're living on limited income, you may not be able to qualify on the mortgage side, but yet you just cleared $200,000 cash in your home. Well, by being able to use a portion of that on a reverse mortgage, now I've just bumped you up into a whole different grade of home that you can look at.
Wow. Okay. Is there any qualifying issues that the parameters that people have to worry about?
Yes, there's qualifying, but they're minimal. We don't look at DTI. They're actually we look at their what we call residual income. The residual income is very low. We do pull credit because we want to see spending habits and make sure that the senior is going to have enough, left over on monthly on that residual income. We don't really look at credit scores. Our biggest thing is we want to make sure taxes and insurances are paid because, again, I sound redundant. That's the only way you're going to lose your home is not paying those taxes and insurance. So the qualifications are much easier and less than a traditional mortgage.
Got it. We got to end on that. Gwen, thanks for being the guest.
Great. Thank you. I appreciate it so much.
You're welcome. One more time before we close out, contact info
Yes.
for you.
Gwendolyn Griffin. My number is 972-839-8895. And you can reach me by email at Gwen.Griffin@fairwaymc.com.
Got it.